Welcome to SenaTuber Media. Understanding Indicators.in Technical Analysis. This video will cover 5 basic technical indicators. Point 1 Volatility Indicators. Point 2 Trend Indicators. Point 3 Volume Indicators. Point 4 Momentum Indicators. Point 5 Support and Resistance. Introduction to technical analysis. Getting started with technical analysis. Learn the assumptions that guide technical analysis, and get to know the basics of trend trading. Introduction to technical analysis. Understanding indicators in technical analysis. Identify the various types of technical indicators, including trend, momentum, volume, volatility, and support and resistance. Introduction to technical analysis. Identifying chart patterns. With technical analysis, use charts and learn chart patterns through specific examples of important patterns in bar and candlestick chart. Introduction to technical analysis. Managing risk with technical analysis. Manage your trading risk with range of confirmation methods. Indicator 1. Analysis using volatility. Volatility can be used as indicator by 2 methods. Method 1. Bollinger Bands. Bollinger Bands are a type of price envelope plotted at a standard deviation level above and below a simple moving average of the price. Bollinger Bands help determine whether prices are high or low on a relative basis. How it works. Determine relative price. When the bands tighten during a period of low volatility, it raises the likelihood of a sharp price move in either direction. When the bands separate by an unusually large amount, volatility increases and any existing trend may be ending. Use swings within the bands envelopes to help identify potential profit targets. Method 2. Average True Range, ATR. ATR is the average of true ranges over a specified period. ATR measures volatility, taking into account any gaps in the price movement. How it works. Determine market volatility. An expanding ATR indicates increased volatility, whether that's selling or buying pressure. A low ATR value indicates decreased volatility, a series of periods with small ranges. ATR is useful for stops or entry triggers, signaling changes in volatility. Indicator 2. Trend indicators. There are 4 methods to analysis the market using trend indicators. Method 1. Simple Moving Average, SMA. This is the easiest moving average to construct. It is calculated as the average price over the specified period. The average is called moving because it is plotted on the chart bar by bar, forming a line that moves along the chart as the average value changes. How it works. Determine trend direction. If the SMA is positively sloping, the trend is up. If the SMA is negatively sloping, the trend is down. Determine trend duration. 200-bar SMAs are common proxies for long-term trends. 50-bar SMAs are typically used to gauge intermediate trends. Shorter period SMAs can be used to determine short-term trends. Determine trading signals via price crosses. When prices cross above the SMA, you may want to go long or cover short. When prices cross below the SMA, you may want to go short or exit long. Using moving average crossovers to generate trading signals. When a more sensitive, faster SMA crosses above a less sensitive, slower SMA from below, it is considered bullish. When a more sensitive, faster SMA crosses below a less sensitive, slower SMA from above, it is considered bearish. Method 2. Exponential moving average. EMA. The EMA measures trend direction over a period of time. It applies more weight to data that is more current. Because of its unique calculation, EMA will follow prices more closely than a corresponding SMA. How it works. Identify trends earlier. Use the same rules that apply to SMAs when interpreting EMAs. Keep in mind that EMAs are generally more sensitive to nearer term price movement. Determine trend direction. When the EMA rises, you may want to consider buying when prices dip near or just below the EMA. When the EMA falls, you may consider selling when prices rally toward or just above the EMA. Indicate support and resistance areas. A rising EMA tends to support the price action, while a falling EMA tends to provide resistance to price action. Exponential moving average. Both the EMA and the SMA here represent 30 days. EMA reacts faster to the first pullback and the subsequent rally. Method 3. Moving average convergence. Divergence, MACD. MACD is a momentum oscillator primarily used to trade trends. How it works. Determine bullish or bearish. MACD crossing above the zero line is considered bullish, while crossing below the zero line is bearish. When MACD turns up from below the zero line, it is considered bullish. When it turns down from above the zero line, it is considered bearish. When the MACD line crosses from below to above the signal line, the indicator is considered bullish. The further below the zero line this cross occurs, the stronger the signal. When the MACD line crosses from above to below the signal line, the indicator is considered bearish. The further above the zero line this cross occurs, the stronger the signal. Method 4. Average Directional Movement Index. ADX. ADX can be used to help measure the overall strength of a trend. How it works. Measures strength of trend. A strong trend is present when ADX is above 25, no trend is present when ADX is below 20. If the ADX is declining, it could indicate that the current trend is weakening. If the ADX is rising, it could indicate a strengthening trend. The ADX indicator incorporates two different components. Point 1 Positive Directional Indicator, plus DMI, shows the difference between today's high price and yesterday's high price. These values are then added up from the past 14 periods and then plotted. Point 2 Negative Directional Indicator, DMI, shows the difference between today's low price and yesterday's low price. These values are then summed up from the past 14 periods and plotted. ADX is less than 25 on the left side of the chart. Plus DM is greater than DMI throughout the uptrend, though this is not a requirement. ADX has fallen below 0.25 on the right side of the chart and DM has crossed up above plus DM. Remember that ADX shows trend. Strength, not direction. Indicator 3, Volume Indicator, increasing volume reinforces the trend direction. Declining volume diminishes the trend direction. A price peak or trough on ultra high. Volume is often an important reversal. Point in a trend. Volume indicators should be considered. Warnings but not signals of change in trend direction. There are three methods to analysis the signal using volume indicator. Method 1, on balance volume, OBV. OBV measures buying and selling pressure as a cumulative indicator that adds volume on up days and subtracts volume on down days. How it works. The actual value of the OBV is unimportant, concentrate on its direction. When price continues to make higher peaks and OBV fails to make higher peaks, the upward trend is likely to stall or fail. This is called a negative divergence. When price continues to make lower troughs and OBV fails to make lower troughs, the downward trend is likely to stall or fail. This is called a positive divergence. Bearish divergence. OBV is not confirming the higher peaks in price, which preceded the sell-off. Method 2, Money Flow Index, MFI. MFI is a volume indicator that measures the flow of money into and out of a security over a specified period of time. It is related to the Relative Strength Index, RSI, but incorporates volume, whereas the RSI only considers price. How it works. Oversold levels typically occur below 20 and overbought levels typically occur above 80. These levels may change depending on market conditions. Oversold or overbought levels are generally not reason enough to buy or sell, and traders should consider additional technical analysis or research to confirm the securities. Turning point. If the underlying price makes a new high or low that isn't confirmed by the MFI, this divergence can signal a price reversal. Bearish divergence. Price peak not confirmed by MFI. Bullish divergence. Price trough is not confirmed by MF. Method 3, Accumulation, Distribution. Accumulation, distribution. Looks at the proximity of closing prices to their highs and lows to determine if accumulation or distribution is occurring in the market. How it works. Determine the direction of a trend. When both price and accumulation, distribution are making higher peaks and higher troughs, the uptrend is likely to continue. When both price and accumulation, distribution are making lower peaks and lower troughs, the downtrend is likely to continue. When price continues to make higher peaks but accumulation, distribution fails to make higher peak, the uptrend is likely to stall or fail. This is known as a negative divergence. When price continues to make lower troughs and accumulation, distribution fails to make lower troughs, the downtrend is likely to stall or fail. This is known as a positive divergence. Indicator 4, Momentum Indicators. There are three methods to analysis the market using momentum indicator. Method 1, Overbought, Oversold in oscillators. In bounded indicators, also called oscillators, a limit exists as to how high or low they can reach. When the oscillator reaches a zone close to its highest bound, it is called overbought. When it reaches a zone close to its lowest bound, it is called oversold. An oscillator value in these zones indicate that the market is vulnerable to reversal. A signal often occurs when the oscillator exits one of these zones. In some cases, the reaching of extreme levels indicates that a new trend has begun. In these instances, the oscillator will remain in a zone for the period of the trend and will give many false signals on corrections to the trend. The interpretation of oscillator. Oversold and overbought is thus dependent on the underlying trend. They don't work when a trend is strong, but excel in trading range markets. Method 2. Stochastic oscillator. The stochastic oscillator is a momentum indicator that shows the location of the close relative to the high-low range over a set number of periods. The indicator can range from 0 to 100. Stochastic oscillators are most effective in broad trading ranges or slow-moving trends. How it works. Determine exit and entry. Generally, the area above 80 indicates an overbought region, while the area below 20 is considered an oversold region. A sell signal is given when the oscillator is above the 80 level and then crosses back below 80. Conversely, a buy signal is given when the oscillator is below 20 and then crosses back above 20. A crossover signal occurs when the two lines cross in the overbought or oversold region. Divergences form when a new high or low in price is not confirmed by the stochastic oscillator. Method 3. Relative Strength Index, RSI. RSI measures the speed and change of price movements. How it works. Determine the speed and change of price. The RSI oscillates from 0 and 100. Traditionally, the RSI is considered overbought when above 70 and oversold when below 30. In an uptrend or bull market, the RSI tends to remain in the 40 to 90 range, with the 40 to 50 zone acting as support. During a downtrend or bear market, the RSI tends to stay in the 10 to 60 range, with the 50 to 60 zone acting as resistance. If underlying prices make a new high or low that isn't confirmed by the RSI, this divergence can signal a price reversal. Indicator 5. Resistance and support. This indicator will analyze the market using Fibonacci retracement method. Fibonacci retracements method. Plot percentage retracement. Lines based on the mathematical relationship within the Fibonacci sequence. These retracement levels provide support and resistance levels that can be used to target price objectives. How it works. Provide support and resistance levels. Applying these percentages to the difference between the high and low price for the period selected creates a set of price objectives. Depending on the direction of the market, up or down, prices will often retrace a significant portion of the previous trend before resuming the move in the original direction. These counter-trend moves tend to fall into certain parameters, which are often the Fibonacci retracement levels. Thank you for watching. If you have any unclear, let me know on comment section. Please like, subscribe, click notification bell.